Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Kala Pharmaceuticals. If you have not heard of this company before, you will probably hear about it in the next 24 to 48 hours. And that is because today alone, it was up more than 200%. Which begs the question, what is this company? What do they do? How are they doing it, and is this something that I should consider investing, especially as we go into 2023? Because you are the guy, you being me in this case, that talks a lot about healthcare, and healthcare is one of the best sectors of the stock market in 2022. Wouldn't this be one of those companies to invest in? Well, before I answer that, I want to go through three things that I want you to pay attention to. I want you to base your own decision off of these three things. Okay, so I'm not going to tell you what to invest in. Everybody's goal is different, but I do want to tell you, hey, these are some of the things that I found today, and they may or may not sway your decision for a positive or a negative. All right, so what is the company? First, their stock symbol is KALA. Kala Pharmaceuticals, and obviously they make drugs. However, they did have a drug which right now is called KPI 012 that is now approved from the FDA to move into phase 2B. Now, I'm not a pharmacist, I'm not a doctor, obviously, so I'm not going to get into what are all the phases of the FDA before a drug is approved and all that kind of stuff. What I can tell you is this: the drug is supposed to treat corneal epithelial disease, assuming I pronounced that right, because I barely passed biology. But aside from that, it's supposed to treat this very serious disease. I think, according to their website, it's about 100,000 people suffer from this per year, which doesn't seem like a lot, but it does, again, if a stock is up 200%, it's obviously going to catch an eye. And it's not the only drug they do produce, but this is one of the major ones that they are producing, and we'll see what happens. Now, the first thing I do want you to pay attention to, so you can circle this as step one, or at least fact point or data point number one, is that they're going to start these trials in 2023. We're not going to get top line data, which means this is the first, first shot at what the trial resulted in until Q1 of 2024. So whatever happens in 2023, yes, the drug has been approved for this particular phase. We're not going to know whether or not this was a successful trial or what is going to happen with the trial until Q1 of 2024. So if you're looking to get into this, it could be a very interesting ride between now and 2024. You could go through all of 2023, things would be fine. The trial fails, and then poof, everything's gone in 2024. I don't know. Or everything could be fine now, and then 2023 people forget about it, and then it pops again in 2024. A lot of these pharmaceutical companies, especially in the very early going, it's all like this because it is all hinging on one particular drug. If that drug makes it, they can take that money and do the next drug, so on and so forth. So it is something I do want to pay attention to. So number one, nobody's going to know the results of this trial until Q1 of 2024. So you're looking at a year and a week, or really a year and 3 days or so. It's probably the end of Q1 2024, so it could be as late as March. So a year and some change. Let's just say that. All right, the next one is performance. Now, y'all know me. I like to invest in companies that tend to go in the right direction. And yeah, 200% is definitely the right direction, especially when you can do that in a single day. However, this is how they've done in the last 6 months. This is how they've done in the last year. And this is how they've done over the last 5 years. I'm just throwing it out there. You make your own decision. But what I'm educating you here is that a lot of times when a new stock pops up, and this company's been around for a while, obviously, so it's not a new company or a new stock per se, but when a lot of these companies pop and what seemingly overnight, a lot of people don't look at that history. So you do want to pay attention to that. So even though the company is up 200%, more than 200% in just a day, it is still down significantly over the last 6 months, over the last 1 year, over the last 5 years. So just pay attention to that, pay attention to that in case you are looking to get into it. It could take a while before this company breaks even in terms of its previous returns based on how strong it continues to perform. Now, in addition to today's 200% performance, right now, pre-market, which means like what we expect the stock to open at tomorrow, is expected to open right now, and I'm recording this around 7:30 p.m., anywhere between 25 to 27%. So it could be even higher at the very open of the market tomorrow. That's not a guarantee that it will close that much higher, but it should open somewhere around that unless things change between now and tomorrow morning, somewhere between 25 to 27% up. So if you're making 225% a day, then yeah, you can probably make up a lot of ground. But how sustainable is that? Big question mark. So you do want to pay attention there. So performance is the next thing. The last thing I want you to do is pay attention to its financials. So I'm going to do a very quick tour across its balance sheet. That's how much money they really have, and also their income statement, how much money they're bringing in and how much money they're actually keeping, because I think there's a very big asterisk here that I want you to pay attention to. I can almost guarantee you there'll be a whole bunch of other people on whatever social media platforms telling you that this is the first quarter that this company is profitable. Therefore, the rest should be profitable and this company should be fine moving forward. I don't know that, but I do want to show you how that's not necessarily the case, and just one little thing that you can learn from understanding how to read these statements. So let's go ahead and take a look. All right, so what you're looking at is the balance sheet. This is from December of 2021 compared to September 2022. This is the most recent statement that we have based on their own website. You can even see the date here was just last month. So again, you can go to Kala Pharmaceutical and go to Investor Relations. You're going to get the exact same thing that I'm looking at here. All right, so if I'm looking here, this is their cash, accounts receivable, inventory, which they don't really have apparently, and this is in thousands, so this would be 84 million. And here we go. So they had 139 million in 2021, and they have lost assets. They're down to about 85 million. I mean, I don't like it, but it's not the worst thing in the world. Scroll down, I'm looking at liability. Now, the reason why I'm looking at liability is because, remember, we expect in 2023 that the Fed is going to continue raising interest rates. We saw with Mullen Automotive and others, where if you got a whole bunch of debt and you paying extra on that debt because interest rates are going up, the stock is probably going to sink. And prior to today, that was the story of this particular company. So let's go ahead and look at their debt and see how quote unquote bad it is. So if we look here, total liabilities, 86 million compared to about 85 million in assets. So for me, that's not the worst thing in the world. You're right about even. Now, obviously, I would like you to have, 2 to 3 times more assets than you have in debt, so that if something had to happen, just like a regular person, right? If I got credit card debt, that's fine if I have way more money to pay for it. If I could just pay for my credit card debt, snap of a finger and not bother me, that's fine. But if I'm even, okay, it's not right? I can pay off all my credit card debt or all my debt period and just be flat broke. That's not great, but I could be debt free. So it's very similar in a company aspect. So it's about even, not the worst thing in the world. Mullen Automotive was $74 million in debt compared to just $17 million in assets. So that was a big problem. This, I'll give it to you. Pharmaceuticals is hard. Okay, it's difficult to make money in this space. And for right now, I'll accept it. All right, now as I scroll down, they seem to be okay, not the best, not the worst in terms of financial standing. But if I scroll down here, this is what I really want to see. This is their product revenues. How much money are you bringing in? So we had 9 million 2022. That dropped significantly to 3.8 million. This is 9 months. So basically year to date at that point in time through September of 2021 and September of 2022. And then quarterly, very interesting. You had $3 million you brought in, and now you're only bringing in about 420 million. Very interesting. Very interesting. If I scroll down here to net income, this is the most interesting thing here. Notice you lost 95 million, you lost 31 million, you lost 28 million. Now notice here, things are moving in the right direction, because what you want to do, again, pharmaceuticals, not every business is the same, but pharmaceuticals, it's expensive. It's a lot of trials, a lot of research and development, a lot of legal stuff you got to go through. So especially when you're relatively new, you're not like a Pfizer, you've been around for forever, you're expected to be negative for a little bit until you start to do the right things, get stuff approved and get stuff on the shelves. So 95 million loss, you shrink it down to 31, you shrink it down to 28, and boom, in Q3 of 2022, things are good. You're finally positive. Well, let's look at that. So if we look here, you'll notice that yes, it is positive. Now, and also these are not quarter by quarter, so this is actually 9 months for each case. So it went from 95 to 31. I think I misstated that. And then quarter to quarter here, it went from 28 to positive at 29. So you made $29 million. So it's very profitable. Well, what's the difference here? Because if I'm looking at this and you go from negative 28 last quarter or Q3 of 2021, and you're positive by almost the same amount at $29 million in profit, something had to happen. Something significant had to happen for you to cover that much ground from year to year. Okay, so let's see. If I am looking at it, and I just scroll down in this particular quarter, I'm looking to see what's different. So looks like the selling and administrative expense was significantly less, 25 million to just 9 million. That will likely help you. And I keep scrolling, and oh wait, what's this? Gain on sale of commercial business, $46 million. That is a one-time gain. That means they sold a business. I forget the name of the business. I did have it up. It starts with an E. But in either case, they actually sold off an arm of a business that resulted in $46.9 million in cash to the company. That is good. That's what made them profitable. However, that is a one-time thing. Just a one-time thing. That's not something that they're going to continuously get. Once you sell off a business, it's gone. You're not going to get the exact same amount from any other sales. So I cannot tell you that Q4 is going to be negative or the rest of 2023 is going to be negative. However, I am here to tell you that is a little deceiving in that, hey, Q3 they were positive and they were profitable. Therefore, the rest of the time they're going to be profitable. Unless they get other businesses to sell, which I don't think they do, at least not to that magnitude, you do really want to pay attention to something like that. So again, 9 months. So from January to September 2021, they lost $95 billion. And then the same 9 months from January to September 2022, they went from $95 million loss down to just 31, which again is generally pretty good, but they were helped significantly by that $46 million sale. So it could look a lot more profitable and a lot better until you actually look into the details. So I wanted you to pay attention to that. So 3 things that you need to know. You're not going to know the results until 2024. The stock has significant negative momentum with the exception of yesterday. The last 1 year, the last 6 months, the last 5 years, it has not been a good, smooth ride. And then lastly, that profitable quarter and this what do you want to call it? This drop in losses, they call this kind of reducing the gap, if you will, narrowing of losses. A lot of people say it's not false, it's real, but it comes with a significant asterisk. So I just want you to know that. And the last thing I'll mention here too is if you want to learn more and learn how we came up or how to really go through and analyze these things, I have all of this stuff inside of the members only. That link will be right here. We talk about how to break these things down, what stocks make sense, what stocks don't make sense, and then obviously give you time to ask questions and do more deeper dive videos similar to this, but really tailored to what it is you're looking for. Before we end this year, I am going to show our members exactly how I'm reformatting my portfolio and what I'm looking at before we move into 2023. You do not want to miss that, so you make sure that you join the members only. All right, that is it for me. I'll talk to you later.